टर्न। आवाज आ रहा है क्या? नील, राखी।
यस सर, आवाज आ रहा है।
Hello, hello, hello. Is it audible? Everyone, can you hear me?
Yes, sir.
Okay, good morning. Just 2 minutes, and we'll get started. हे काय करू मी इथं लावून ठेवू फक्त. हे काय आहे? हा ठीक आहे, असं लावलेलं असं तर नाही येत, पण ह्यातनं आवाज येत नाहीये. या स्पीकर पण आवाज येत नाही ना. मी इथं बसलेल्या मुलांना तर काय केलं डायरेक्ट काय ओरडायला लावतात. हा पण ह्याच्यातनं काही येत नाहीये. श्रीकांत सरांचा फोन आता येतोय मला. त्यांना म्हणा आता मी नाही उचलत फोन त्यांचा. मग मी सुरू करू का लेक्चर? इकडे येणार नाही ना कोणी? मग घरनच घ्या की. बरं चला. ओके, एक मिनिट माझी पेन ड्राईव्ह. काय झालं? काय चालू करायचं? तो कॅमेरा का? अच्छा, पण दिसतोय का आता? त्यातनं दिसतोय का? हो, पण मग मी इकडं फेस केला. इकडं करायचा का? आपला आपणच. आणि मी इकडे गेलो की पण कॅच करेल. नाही मग मी इथं पेंटच वापरेन ना, सोपं काम.
Sir,
या टेल मी.
if you want, you can face the laptop also. Not much of an issue because we are getting a good side view of you, so it's
Okay.
not a big problem.
Okay, perfect. So then I will just sit here.
Also, sir, just one thing: the camera is object tracking. So when you make something on the board, you may have to stand next to the board. Otherwise, we cannot see the board.
Acha, you will not be able to see the board.
Yes. Currently, we can only see the bottom right corner.
Okay. Acha, only the bottom of the board is visible.
Yes.
Fair enough. वो हाथ चालू राहू दे. हाँ अरे हाँ ठीक है. Okay, so my screen is visible, right?
Your screen is currently not visible. It was visible some time ago when you.
Sorry. No, it is saying I am presenting. So the computer screen is visible, right?
Yes, I mean the computer screen is visible from the camera.
No. It should not be like that.
No, sir, you're not presenting right now.
So
Maybe
if you just present your screen, then I guess it'll come.
No, it is showing me stop presenting. So I probably
Sir,
am.
in that case, could you please stop presenting and then present again?
स्क्रीन नाही
Yes,
दिसत आहे, फक्त कॅमेरा दिसतोय त्यांना, असं म्हणतात ते. ओके, थोडा स्क्रीन शेअर करा, हे नको. हा मग त्यांना काय नाही दिसत. बरं एक मिनिट, मी इकडे फोल्डर तयार करतो. हे माझी फाईल आहे. आता ही शेअर करायची, म्हणजे हा स्क्रीन शेअर करायची. Can you see Excel file on my screen?
No, sir, not visible.
No. Okay.
No, sir, you're not presenting.
Okay. Okay. एकदा stop presenting
पर
करा.
अगर हो पाया ना एक बार स्टॉप कर दीजिए प्रेजेंटेशन फिर से
हाँ,
स्टार्ट कीजिए.
वापस शुरू करते हैं. ठीक है. Done. Correct. Now, can you see?
Yes, sir, now you're presenting.
Okay. Okay. Done. एक मिनिट. 2 मिनिटं थांबा. चालू होऊ दे properly. अच्छा. So the one we will have one of the two, I think. So either the camera will be there or the screen sharing will be there. असं येते. either हे असेल नाही तर ते असेल. आपण दिसत नाही आता इथे. ठीक आहे. लेट इट. मला काय व्हिडिओ नाही दिसला तरी मला हा बोर्ड नकोय. मी पेंटनी काम करू शकतो. तिथं माझ्याकडे व्हाईट बोर्ड येतो. हे काय आमचा व्हाईट बोर्ड पेंट व्हिडिओ काय 2 वर्ष झाले आम्ही विचारत होतो. आगे आला व्हाईट बोर्ड. मार्कर पण चालू. इथं कोणी आलं तर प्रॉब्लेम. अच्छा तिथे दिसतंय का? अरे वा ठीक आहे. डन. थँक्यू. चहा द्या ना मला नंतर. ओके एव्हरीबडी. सो हां विदाउट हां
Yes, sir, we can see a canvas.
okay canvas as in the paint is visible. Fair enough. So let's get started. Okay. Just a minute. Let me see my Excel file. Okay, fine. So let's start now. I think with all this online offline mode, we always have a challenge with technology, understanding the setup of every institute. Okay, so okay, good morning everyone. So my name is Samir. I will be taking you through some parts of the subject at hand, which is financial modeling and engineering. I think the syllabus you have is slightly different. So I will be addressing only a few modules, okay, of the subject, and therefore we will have a smaller engagement uh, in this semester. Now, let me give a brief background about myself, and then we will get into the topic at hand. So I am an engineer, then an MBA, then a CFA, then an FRM. I worked with investment banking companies, primarily in investment research. Credit Suisse, Crisil, Credit Point were past employers, and my role primarily was in helping fund managers take a investment decision. So we were only an aid, okay, to the final decision that institutional fund managers were primarily taking. That profile typically is called as equity research. Then post my corporate experience, I went on to starting my own consulting firm, and today we have two primary areas of work. One is into training. Okay. So I am visiting with most of these schools in Pune, Biasis Group, Indira, Oakley, National Insurance Academy. And with corporates, I do training with Pro School and Dun and Bradstreet. And that is one part which is training. And the second one is we are also a small setup of levered traders. So we primarily manage funds of our clients in the future space. So we trade it across commodities and currencies and indices. The past 7 or 8 years. So some of the learnings that I was able to get in post MBA, then after CFA and FRM, some of that we use in our investment decision making process, and that's how we take some trading bets on these clients on these funds. Now, so that's my background, okay, and a part of it is what therefore I will share with all of you. primarily get into the investment decision making space. So let me quickly introduce the topic at hand. So I am focusing on the modeling aspects, okay, more so from the investment space. So let me explain what I mean by financial modeling, and we'll have a look at a couple of examples which will give you some color on what exactly we are aiming for. Okay. So when we say financial modeling, basically it is a investment decision making tool. That's our basic definition. Okay. Now, first of all, we'll have to figure out what is this investment decision, and then we will see how modeling helps us take the investment there. So, let me give an example, okay, to explain the same. Okay. Now, let's say you own a grocery store, and in finance or in accounting, you have said that there is a value associated with every asset. And if you want to trade an asset, if you want to do a deal, an arm's length transaction has to take place. Arm's length transaction is basically a willing buyer and willing seller is needed. Willing buyer, willing seller is needed for every deal to happen. One that we are looking at here is, let's say you own a grocery store and I come to your store as a customer and I ask for, say, toothpaste. I want to buy a toothpaste from your store. So we basically want to have a deal. And the basic requirement of deal is it should be an arm's length transaction. So the question is, how will we able to do this? So we'll be doing this deal at MRP. At MRP, I am a willing buyer. You are a willing seller. Okay, and a deal takes place. Okay, so that's the first transaction we have done. Okay, and the goal of this exercise is for us to understand what do we mean by financial modeling. The goal is to understand investment decision making means what. So I've come to your store. I've asked for a toothpaste. We did a deal. Now I'm asking to buy your store. मुझे आपका स्टोर खरीदना है. So the question is how will we value it? का दाम कैसे लगाए? क्योंकि MRP तो है नहीं. So now how to reach at a willing buyer, willing seller array? That's what we want. Okay. So give me some pointers, everybody. किस तरह से हम इस स्टोर का दाम लगाएंगे? आप थोड़ा बताइए मुझे. What do you feel? Is the question clear, everyone? सवाल समझ में आ गया आपको? Hello, is it audible? Can you hear me?
The starting point can be by you referring to the market rates for similar stores in the similar locale.
Correct. Okay, good. So basically land location का कुछ दाम होगा. एक तो वो consider करेंगे. Fair enough. What else? Everybody, is the question clear? I am also writing it down alongside, so you will have the thing on in front. Just seeing if the chat option is also open now. Okay, you can put messages in chat also if you want. Yeah, everybody, is the question clear? कि अभी हमें उस स्टोर का दाम लगाना है. आप बताइए, आपका स्टोर है, आप दाम कैसे लगाएंगे इसका? तो एक पॉइंट आया है, लोकेशन और लैंड का जो वैल्यू है बेस्ड ऑन द market price, we'll consider that. Fair enough. What else?
Sir, finding the value of the goods that we have, like net inventory.
Correct. Exactly. Good. Inventory present in my store, that should also be valued.
Sir, your total sales throughout the year, your cash flows basically, and you can find out the present value of future expected cash flows.
Okay. Good. So we will say profits. Instead of saying sales, we can say profits. Okay. What else? So let me give you some numbers. Okay. So let's say you have all numbers in crores. Let's say I have land location of 2 crores. I have inventory of say 50 lakhs, and then I have the equipment, furniture in my store of around 50 lakhs. Okay. So my value of the store is coming out to around 3 crores, and let's say I have a profit of around 30 lakhs per year. So you can see that what we are looking at right now is typically what you call as an investment problem. Now, is it good enough to invest in this store or not? That's the question which we are trying to deal with here. So we have total value of 3 crore. So that is one way of pricing this store. Okay. तो ये दाम लगाने का एक तरीका आपका है इस तरह से. Okay. But we can make another argument here. Okay. Of valuing the store, okay, which you have correctly actually said. But still, to complete the case or complete the explanation, I'll give you another argument here. So one way of pricing the store is this way, okay. But the other way is by looking at the earnings of the store. Okay. So let me be the seller now, and you be the buyer. Okay. So what I will say as a seller, okay. Let's say if I am selling this store, one of the ways of pricing the store is 3 crores, which is the value of the land location and the material present in the store. Okay. But this does not capture my business. Okay, the value of my business is not getting captured. What is getting captured here is basically the value of the assets which are present in the business. Now, whether I am running a grocery store or I am running a pharmacy shop or whatever else, okay, that is not getting considered here. So per se, my business is not getting considered. So what you have to do, okay, or how valuation typically is done, is by looking at the earnings power of the business. Okay, so here's my explanation for why valuation is done. Let's say I am operating this store as a seller. I am operating this store, say, for past 10 years. 10 years. And let's say I'm making a profit of around 30 lakhs per year. Okay. So this is like a salary to me. Okay. So if I sell this store, I lose my source of livelihood. Correct. And the problem is in the market, nobody is going to give me a job of say 30 lakhs per year because I don't have any other skill to offer. Okay. All I can do is I can operate this store. So I will be willing, okay, as a seller, my willingness to sell the store, if you compensate me for my earnings loss. Okay, so I expect to operate the store for next 30 years. So my asking price for the store is 30 years, 30 lakhs, which is 9 crore. So do you feel this is a fair argument? And second is the price correct? Everybody comment. Yeah. This is another way of valuing it. Yeah. Yeah. Do you think the argument is fair?
No, sir.
Okay. Okay. What's wrong in this argument?
So we have considered a uniform
Right in that.
profit for the whole 30 years. So we have to consider time value of money as well.
Yes. Correct. So price is not right. Fair enough. I agree. Price is not correct because time value of money is ignored. Okay, time value of money should be considered. Correct. That is right. But can I value the store by some method like this? Do you think the argument is fair? As in compensating for potential earning loss. To the current seller. Price is not right, which is right. So 9 crore cannot be the asking price of the store because time value of money is not getting considered. Because if you operate the store, you're going to earn the 30 lakhs over the next 30 years. You're not going to get them all in 1 year. So the next year 30 lakhs might be worth say 28 lakhs today, and 2 years hence 30 lakhs might be say 26 lakhs today. So ideally we should find the present value of the expected cash flow, okay, which is what you correctly said at the start. So one of the basic valuation principles which are followed in the market, okay, for every deal, okay, to happen is always present value of expected future cash. For example, let's say even in this case, if I consider current FD rate as around 6%, and if we say 5 crore is the value of the shop, so the interest that you are going to earn on this 5 crore is 630 lakhs. So this basically compensates you for your potential earning loss. So the store value should be 5 crore and not with 9 crore. Now the question to all of you is, we have adjusted for time value of money, considering 6% as a discount rate. So everybody, will you be willing to buy the store at 5 crore? That means again the question is, are you buying this argument?
Sir, if you have to compensate this departmental store owner, then we can pay goodwill if this department has some brand
How
reputation.
much? The question is kitna? Or how do we calculate goodwill? So basically that is the reverse is what we will get. Okay, so goodwill will get back calculated, in fact, which means we'll have to find the deal value first, correct? A price at which both the parties are willing. So we have done two ways of valuing the store. One is this 3 crore and other is this 5 crore. Okay. So the question again I'm asking is, will you value the store as per the right hand side method or the left hand side method? As a seller, what will you be more happy with? Yeah.
So I think as a seller, right hand side, but as a buyer, left
Right
hand
hand.
side.
As a buyer,
Yes,
left
sir.
hand side. Okay, as a buyer, left hand side, and as a seller, right hand side. Okay. So the willingness obviously is the key, right? So as a seller or as a buyer, okay, ideally in the marketplace, almost always it is the right hand side method that you follow for valuing anything. Okay. Therefore, this right hand side method is called as the business valuation method or valuation based on earnings power. Okay. And left hand side method is called as asset purchase method. And you can see in the name itself, asset purchase means हम इस right method में क्या कर रहे हैं, sorry left method में क्या कर रहे हैं, सामान खरीद रहे हैं, correct? We are just trying to buy the material within the store. Whether you run a grocery shop or a chemist shop by using that material in the store is second, correct? ये left hand side. Whereas right hand side में क्या हो रहा है, you are giving the value to all the relationship, to all the sustaining business that the current owner has developed, okay, which is definitely a benefit that you are going to get if you buy the store and if you operate it as it is. Okay. तो ये 30 लाख का प्रॉफिट होते ही रहेगा आपको अगर आप ये स्टोर चलाओगे इसको खरीद के. तो राइट मेथड में हम वो उसकी कीमत लगाने की कोशिश करते हैं. एंड कीमत लगाने की कोशिश कैसे करते हैं? एज वी सेड, यू कॉम्पेंसेट फॉर द अर्निंग लॉस ऑफ द करंट ओनर. क्या अर्निंग लॉस है? 30 लाख का अर्निंग लॉस, तो उसका आप प्रेजेंट वैल्यू दे. एंड एज यू करेक्टली सेड के टाइम वैल्यू ऑफ मनी हैज टू बी कंसीडर, देयरफॉर कैश फ्लो को लीनियरली ऐड नहीं करेंगे, उसका प्रेजेंट वैल्यू निकालेंगे. So this makes our basic valuation philosophy of present value of expense. So in the market, you will go by the right hand side method, which obviously is fair for the seller. Correct. Will the buyer be willing? So we will discuss that separately. Okay. Like the left hand side is a easy method for the buyer to be willing because you just have to pay less, okay, which is right. But that's not how the deal happens. Now let me give an example of where this method gets applied a lot. तो ये मैं कह रहा हूँ कि बाजार में इस राइट हैंड साइड मेथड से सारा वैल्यूएशन होता है. So let me explain where you can find something like that. Okay. So you know companies are listed in the stock market. There is a book value and then there is a market value. Okay. For more than 85 to 90% of the companies listed, what you see is the book value of the company might be say 100 crore, and the market value might be say 5,000 crore. Now, how is this difference explainable? Everybody. So, what is book value? Book value is the difference between assets and liabilities of the business. Correct. Which is what we are doing here. We just found out the assets. If there is any debt or any other liability on the books of the company, we'll just minus that. That will become our total. So, like we did this method, almost 85 to 90% companies will be trading above their book value. Okay. So, you will generally see a scenario like this. Book value of the company is 100 crore, but its market value is 5,000 crore. Why is the market value 5,000 crore? मतलब देखा जाए तो from the equity holders perspective, owners perspective, this is also the equity value, owners value, this is also the equity owners value. तो बुक्स के हिसाब से वैल्यू उसका 100 करोड़ होगा, लेकिन बाजार में उसका वैल्यू शायद 5,000 करोड़ होगा. So this difference is because in the market when the stock is listed or when you are trading or exchanging the equity of a company, it is always, if it is a profitable company, it will always be done using the business valuation. Okay. तो ये डिफरेंस जो है ये बेसिकली दिखा रहा है आपने क्या किया, प्रेजेंट वैल्यू ऑफ एक्सपेक्टेड फ्यूचर कैश फ्लोज यहाँ पे कंसीडर किए हैं. Okay. Whereas book value is basically the asset purchase. I'm just trying to give you an example of where when I'm saying कि बाजार में ये method use होगा, I'm saying that right hand side method will be used, okay, by both the buyer and seller. Where seller willingness is obvious, buyer willingness we still have to make a case for it. We'll do that in some time. बट व्हेन आई एम सेइंग कि बाजार में ये मेथड जास्ती यूज होता है या मेजॉरिटी टाइम यूज होता है, तो वो कहाँ होता है, तो ये आपका बेसिक एक्सप्लेनेशन उसका ये है कि बाजार में मार्केट वैल्यू ऑफ कंपनीज इज ऑलवेज मोर देन book value. So the P by BV ratio for 90, 80, 85, 90% companies is more than 1. Okay. So how have they come out with a higher market value then? All they have done is they have used the earnings power based valuation technique. Okay. So therefore right hand side method is what you will follow for value. Okay. Now all this, so yeah, everybody, have I put the point clearly? Oh, sorry, I have missed out your argument there. Yes, if loan is taken for running, then we will add. Then will it be added to valuation? No. Loan is taken. Let's say this store has a 1 crore loan also. Loan of say 1 crore. So then when the business is being bought, so basically the loan will be on the books of the business, correct? So when you buy this business, you will pay 5 crores to this business, but this is the total value of the store. So out of the 5 crores, 1 crore loan will be subtracted and 4 crore will be given to the gold loan. Okay, are you getting it? So basically what we have found out is the value of the enterprise. Okay. The entire business as such, we have tried to value it at around 5 crores because the entire business is generating a profit of around 30 lakhs per year. So you will you will buy the business as 5 crores, and along with that the 1 crore loan will also come to you. Okay. So that 1 crore loan you will pay off. So remaining value 4 crore will be given to the current company. So in this method, if you had the loan also, then you would probably show it as a minus entry here, and the value would have been around 2 crores. That way, okay. But I'll not keep loan here. Okay, let the loan be there. We'll see it later. Yeah, is the explanation clear, everybody? So why we will use the right hand side method, or in which method primarily is being used most of the times in the market? So it is generally the right side method which is So the question is, when do I use a left side scenario? So now let's say my profit of the business is not 30 lakhs, but let's say 10 lakhs only. So 10 lakhs ka present value might come out to, let's say, 1.5 crore. Okay, in that case, obviously you will say that the business is not having enough value in it. Okay, but the assets that are present in the business, जो सामान है आपके धंधे में, उसका ज़्यादा value है आपको. So you will end up valuing the business as per the left hand side. So in a liquidation scenario, you will end up using the left hand side method rather than the right hand side. So basically, as a business, you will value a business in both the cases. Okay, that is for by asset purchase method also, and as well as by the business valuation method also. And higher obviously is considered by the seller, and the buyer will have to comply with that. Okay. Now the question is, where is financial modeling coming in all of this? So what we have seen is an investment problem, and what you try to do is you try to approach it with a method. Okay, तो method क्या है आपका ये investment problem solve करने का? Method है valuation. You have to value the asset in such a way that all the parties involved in the transaction should be happy with the valuation. Okay. जो involved है valuation में वो सब उसके साथ comfortable होने चाहिए. So the method, so valuation, if you do the valuation, then you end up getting a price, okay, which is, let's say, 5 crores in this case, and then at 5 crores you are able to take this investment decision. Okay, investment is दाम पे करेंगे. Okay, if I am as a buyer I'm getting this price, then I'll be buying it. If as a seller I'm getting this price, then I'll be selling it, and a deal will take place. So this is, so the price, मतलब दाम जो फिक्स हो रहा है वो आपका इन्वेस्टमेंट डिसीजन करने में मदद कर रहा है. दैट्स द एड. ओके, दैट्स द हेल्प दैट यू आर गेटिंग. सो बट you, how do you find the price generally, or how do you get to this value? So right now we did a very simple analysis. We said that, okay, let's take the profit and let's find the present value of it. But obviously you will not, it will not be that straightforward. You will obviously have to first of all, not the profits, but you need the estimate of cash flows. So you will need to figure out what are the future expected cash flows. So estimate cash flows, that is going to be the one first primary requirement. And then you have to estimate the discount rate. Okay. And then you do valuation of it. So all of this you will end up doing on some kind of a tool. So it will be spreadsheet. So you will need Excel. Okay. And then what gets up created, it's called as a financial model. Okay. So what is the model doing? So the model is only acting as a tool which is helping you put all this thought process in the paper or in a tool. Okay. And thus it helps you in figuring out the investment. Okay. That's how it comes back. The example summarizes back to the definition. Okay. So what is financial modeling? So modeling is an endeavor where you try to estimate the future cash flows of any underlying investment bet. Okay. So will I use the same technique for pricing a toothpaste? Obviously not, because this is a consumption product. So pricing of a toothpaste is done using costing techniques, which you will study in a subject called management accounting or costing. ऐसा कुछ सब्जेक्ट होगा जिसमें आप वो वेरिएंस एनालिसिस, एबीसी एनालिसिस वो पढ़ो. But for any other income generating asset, okay, which is primarily being, where money is primarily being put with the perspective of investment, you will be following this approach. Okay, where you will try to estimate the cash flows and bring them back to present value. Now, whether I am looking at pricing a project, pricing a derivative contract, or pricing a debenture, valuation principle is same, except for cryptocurrencies. Okay, every other asset follows the same rule of valuation. अभी क्रिप्टो करेंसी का समझ में नहीं आया है अभी तक, बिकॉज कैश फ्लो का नंबर कुछ क्लियर नहीं है उधर. बट अदर देन क्रिप्टो करेंसीज एंड एनएफटीज में भी, चलो एनएफटी तो आर्ट में कंसिडर कर लेते हैं, लेकिन क्रिप्टो करेंसीज का छोड़ के अदर एनी अदर एसेट यू टेक, whether it is real estate, whether it is stocks, whether it is valuation of a company debenture, that is bonds or derivative contract. The principle of valuation is always the same, present value of expected cash. Okay. So this is how, or this is what we will try to do in finance. Now let me give another example where institutionals end up using this. Okay. So for example, and then we will get on to what we are going to cover in the course and what will be our flow, and then we'll do some exercises. So let's say national highways are there. Everybody who builds a national highway, we are just creating an investment problem again, but now instead of creating a retail example, we are looking at an institutional case. So who builds national highways?
Sir, it's a public-private partnership.
Correct. So national highways are primarily built in a public-private partnership, but it's primarily done by a private contractor, and government acts as a overseeing body, the governance agency. So examples of private contractors are IRB, AFCON, State Kumar, so many of them. It is a for national highway is generally a 4-lane road, and it takes around 2 crore rupees per kilometer per lane. Okay, for the construction of the national highway. So let us say you and me are bidding for a road length of 100 kilometers. What will be the cost? हम समझ लो 100 किलोमीटर का रोड बनाना चाहते हैं, तो आपके हिसाब से कॉस्ट कितना होगा? Based on the numbers given here.
200 crores.
Sorry?
Sir, 800.
800 crores. Correct. Now the question is, so this has now become an investment problem. अब 800 करोड़ लगाना चाहिए कि नहीं लगाना चाहिए? Should we invest 800 crores? That's the question. Okay, we invest as if you are say IRB or AFCON or somebody working in those companies into the investment decision making stage. So this is the problem that you are facing. Okay, so solution for it obviously is financial model. So how do these companies go about deciding this investment? And it's not just about setting up a national highway. It's starting a new business, setting up a factory, port, airport, whatever new endeavor you want to start. Okay, almost always you will have to do some similar exercise. Okay, so should I invest or not? That obviously becomes the question. So there is no clear answer to it. Okay, there is no right or wrong when it comes to investment decision. So what generally is done, okay, is there is an approach that you follow. Okay, and we are going to follow the same in this example also. The approach is the same. You do the valuation of the underlying business opportunity. So how do you do the valuation of the business? So what you do is you estimate the expected cash flows from this business opportunity. So for example, let's say it takes around 400 crores over 2 years to build this. Third year onwards, we will start collecting toll, but we don't know how much toll will actually come. So what we will do is we'll estimate the expected toll collection by running this national highway. Okay, so that estimate is done in a standard way. What is the standard way? The standard way is creating financial statements. So in accounting, you must have studied income statement, balance sheet, and cash flow. So what you do is you forecast, okay, the financial statements of a business for the entire period. For example, in this case, for the next 18-20 years, you will forecast the financial statements of the balance sheet cash flow. And this cash flow statement will give you the estimate of expected cash flow. Okay. Then you assess the risk by figuring out the expected discount rate. Then use the valuation principles like NPV, IRR, DCF method, okay, to price the opportunity. Okay. Value the underlying asset. And then you decide that if the value looks good, okay, for example, like we did in here, we figured out the value of the store, and then at 5 crores we were ready to buy it at that price. So something similar you do here. Let's say you find the returns on this investment, and if the returns are reasonable enough, then you decide to go ahead with the project, okay? Or you decide to put the money, that is 800 crores. So that is typically how you end up taking an investment decision in the companies. Okay. Now, whether as we said, whether it is for a national highway or a factory startup, or whether it is buying a stock of another company, doing an M&A of another company, okay, spinning off a division of your company, okay, reverse merging any division back, or reverse merging another company with your parent, any transaction, okay, that you do of some similar, you will always end up doing this entire exercise where you estimate the expected cash flows and price them. So your basic application of financial modeling is, as we said, in the investment decisions. Whatever investment decisions you take, everywhere you will see financial models being made. Now, typical requirements of making a model, therefore, will be you will need to know a little bit of Excel. You will need financial statements, basic valuation principles, and little bit of quants for risk modeling. Okay. Risk modeling also is a separate theme actually, but we will do one example where we'll try to see how your risk principles can be considered so that probability-based decision making can be done, okay, at the uh, corporate level. So these are my primary requirements, okay, for making models, okay, and this is the primary application of it. Now, once say you analyze this idea and you figure out that okay, putting up this national highway looks good. That's next. So you have made a decision for yourself. The next requirement comes is in fundraising. अब ये पैसा कहाँ से आएगा? So you have long-term sources of finance as debt and equity. So why will the bank give you a loan? Let's say we are looking at a 3:1 debt equity ratio. Out of the 800 crore requirement, let's say 600 is coming in the form of debt and 200 is coming in the form of equity. So the question is, why will the bank give us this loan? Okay. So you'll have to convince the bank that if you give us the loan, we'll be able to pay you the interest, we'll be able to repay your principal back. So how do you explain that to the bank? So basically what you do is you submit the financial model. Then you have in the bank there is a credit officer, okay, who is somebody who knows how to read the financial model and get your take your input from it. Okay. And then what the credit officer does is that he looks at the previous uh, uh, loans that have been given in the road development sector, and those learnings he will apply on your proposal. So if there have been any problems while you are collecting the sorry, if there were any problems while you were collecting back the loan, that experience, okay, is basically what he will apply on your project, and he will try to see whether your project actually is able to pay off the interest and principal repayment in a timely manner or not. So basically that process is also called as stress testing. Okay. So he will stress test your model for some really extreme scenarios. That is one. Okay. Apart from that, he will also try to see what claims you have made in the model are reasonable enough or not, and then basis that he will present his case to the credit committee within the bank, and then the investment decision. The loan will probably get disbursed. Okay. So the financial model not only helps you decide for yourself, but also helps you in fundraising because it helps the stakeholders decide whether it's a good investment opportunity or not. Okay. So debt and equity, therefore, same happens for equity. You can raise money via private placement, or you can raise money via an IPO, okay, or you can take money from an HNI via the venture capital, private equity route. So different ways of fundraising are there in the equity, but the same thing, the process for those entities or stakeholders to decide whether they should put their money in your business opportunity, in your business or not, is the same. You all that you do is you end up building the financial models. Based on that, you take the investment risk. So to sum it up, within the industry, there are two sides of operations. Okay, so one is there is a sell side, and then there is another is a buy side. And what they are buying and selling primarily is they are buying and selling investment ideas. Okay, so investment idea is, so for example, this project, okay, that national highway. This was an investment idea that we have evaluated. Okay, and how did we evaluate the investment idea? By making the financial model and then figuring out the valuation, and that acted as a key decision making ratio. So that that is an investment idea. Now somebody in the market is going to make such ideas and sell it to somebody who is going to act on those ideas. Okay, that's how the financial or capital market side of the finance function, okay, works. So there is a sell side and then there is a buy side. So the buy side does not mean you are buying a stock. It also might mean you are selling a stock. Okay. Basically, what you are buying is the investment idea, and all investment ideas are made using financial models. Okay. Not all, but most of the investment ideas are made using financial. So if I am working on the sell side space or on the buy side space, my basic requirement is I should know financial. So what comes in sell side? Brokerage, project advisory, IPO advisory, merchant bank. Okay, basic term for all of them is an investment bank. Okay, so what is the investment bank? It's a fee-based entity which helps in investment decision making for all the stakeholders. Okay, brokerage, project advisory is a different word. Okay, and then who is buying? Okay, so the buyers are mutual funds who are institutional buyers, pension funds, sovereign and insurance companies, sovereign funds. Then you have banks, then you have corporates doing M&As, and then you have retail. So all these are my buy side participants. So whether I am here or I am there, okay, working as an analyst in either side of the industry picture, what I need to do is I need to be able to understand and evaluate investment ideas. And how do you do that? So you end up making the financial. Okay. So that is basically what we will try to cover in the course. Okay. So what will be my content? Okay. So I'm just giving you a brief background as to why we are doing all this. Okay. So that the remaining time we have, we will spend on how to do it. Okay. And also wanted to introduce this valuation principle because this is going to be the backbone of everything that we do in the subject. So what we will cover here is the introduction which we have already done now. So we'll have a look at basic Excel next. Everything from a point of view of making a financial model. Then we will have financial functions. And then we'll make a basic franchisee model. So we'll basically value a store. Okay, value a business which basically is operating a store. Then we will revise our TVM and FSA. Then we'll make a basic FSA model. Yeah, basic FSA model, and then let's see how the time is. Based on that, either we'll take a project financing long proposal or equity valuation long proposal. Okay. One of the two we will try to make. So likewise, 1, 2, 3 at least models, or if time permits, 4 more. Difference between project and equity is project would be like say national highway ka valuation, या factory ka valuation. Whereas company is where you will be doing a valuation of a business which is a going concern. Okay. So you can say that consortium of projects is like a company. तो 4-5 प्रोजेक्ट मिलके एक कंपनी है जो गोइंग कंसर्न है. प्रोजेक्ट का एक फाइनाइट लाइफ है, कंपनी का एक इनफाइनाइट लाइफ है बिकॉज इट्स अ गोइंग कंसर्न. So there is a subtle difference between the two. Approach is same. Approach is going to be the basic FSA approach, okay, financial statement based approach, which is what I said. कि आपको चाहिए Excel, आपको चाहिए financial statement or basic valuation principle. So approach will be same, but these are two primary applications which you generally see on either the sell side or buy side, okay, of the model. So this is what we intend to cover, but let's see which of the two or maybe both we can cover depending upon the time that we have at. Okay, so this is my coverage and this is the basic introduction to the subject. Any doubts, everybody? Because here onwards we will get into making the start. We'll start with the basic Excel part. We need a quick revision of some principles in Excel or some ideas, some functions in Excel for making the model. Okay, yeah. But I'll take a pause here. If you have any doubts, let me know.
Sir, before starting any project, the company asks for
Before starting a project, company.
DP.
Hello.
PR, which is
There's too
detailed
much disturbance. नहीं आवाज नहीं आ रहा. Before starting a project, the company asks for dash.
project report. So what all so before starting a company,
Yes, yes, yes.
it is
Detailed
said
project report.
for a
Correct.
company to
So you will see when I said you submit a financial model basically, and a write up along with that, which is basically the detailed
so
project.
what all are the
Primarily the explanation. So primarily it is the explanation of the financial modeling assumptions that you have taken. So you will see that you will be taking certain assumptions in the way you will be building that entire model. So detailed project report is just a commentary of what you have done in the model. And obviously you also submit the model to the credit officer, but along with that you also submit the detailed project report, which is also write up alongside, so that the business or the credit officer is able to evaluate and understand your thought process and then apply his own ideas on the investment base. So that is primarily what they do for debt fundraising. Something similar from a perspective of upside return is written in the IPO document also. If you go through the red herring prospectus, so they will explain to you what they are going to do with the funds that they are going to raise in an equity issue. Again, the same. That explanation is based on what a financial model which is there at the backing. Good. Do I answer? Have I answered your question? Hello.
Sir, another question.
Yeah.
How do you go about valuing new ideas in general? Like suppose it's a startup that has a
Valuing?
new ideas, new startups.
Okay.
Then
So
will you follow the same process or is it different?
So traditional valuation method like present value of future cash flow may not necessarily directly apply to all the startups, okay? Because a lot of them are cash negative, okay, and they might have several years after which they might turn cash positive. So in that case, you take the multiples approach. Okay. So in valuation principles, there are three different valuation approaches. One is this liquidation, second is earnings power based valuation, and third is multiples based approach. Okay. Based approach.
yes,
So
sir.
when you are looking at multiple, yeah, sorry, saying something. Okay, when you are looking at multiple based approach, then any idea can be valued. Okay, for example, let me give an example. Okay, one of the ways of valuing any underlying asset is by using what is called as the PE ratio. Okay, price of a company divided by its earnings. Okay, at a per share level, that is. So you can also convert P to M cap upon earnings. So I'm just removing the per share from it. So you end up giving a multiple, let's say 15 times of whatever is your profit. So let's say your company is making say 10 crores profit, valuation is 150 crores. It's like a 15 times valuation that you have. Now, if you're not making profits, which is typically what happens with the startups, then the valuation is primarily based on some other multiple. For example, subscribers. Let us say I have 1 million subscribers, and let's say I project, okay, to earn, let's say, $100 from each every year, let's say, and then my profit ratio on it is, let's say, 30%. So $30 is my profit expectation, and 1 million subscribers, so 30 million is my say dollar 30 million is my expected profit eventually that I will get. Okay, let's say I give a multiple of 15 times on that, so 150 million will be my 450 million will be my. Okay, so now you can see that this is the valuation which is done primarily not on today's profit. It is done on today's subscriber base. Okay, so or I might expect to reach to a subscriber base of so much, and let's say my model is the service based model. So you expect your expected earnings from the service that you are providing to all those subscribers, and then the 15 times is basically trying to take into account the opportunity of future earning. If this projection is risky, okay, that is you might probably not be able to earn say $100, maybe $50. So if there's too much variation there, then the multiple year will be lower. Okay, so you end up doing some kind of multiple calculation, not on profit as a parameter, but on other parameters like number of subscribers that I have, or or potential or addressable market. Okay, so there is a total addressable market of which you try to say I will get a percentage so much of it, and on that percentage that will be my revenue, so much will be my earnings, and my multiple on that will be so much. At times they will also come up with multiples like price per subscriber. So P by subscriber, let's say of 20. So if you have 1 million subscribers, 20 million is the valuation. Done. Okay, that also can be another approach where you have not gone whole hog and estimated the profit potential, but what you have done is you've just taken the number of subscribers and you've seen what probable earnings you can make from it. Okay, and then price. So, but all these are can be classified, or this approach can be generically classified as the multiple based approach. You have to define a multiple which will help you value. So that's why there are three basic valuation techniques. One is asset purchase when the business is not having any great value, but there is material in the business. सामान है आपके धंधे में फिर भी, तो आप ये मेथड यूज करेंगे. If the business is already profitable, earning good profits, then the approach will be earning power based valuation. If the business is not having any profit, even if it is having profit, okay, profitable business can also be valued using multiples approach like the PE ratio that I explained here. But even if your business is just a startup idea, okay, some way you have to put a price to it. So then you end up coming up with some slightly more creative ways of defining the uh, multiple. Okay, something similar can also be said for other businesses, like for example, say metals and mining company. There also you can do P by NAV as a multiple. Okay, or for banking business, you can do P by B, that is book value, where book value is much more important in case of a financial institution than others, because financial institution primarily is borrowing money at cheap and lending it at costly. So the money which is going to be on the liability side of the book, okay, is going to be the key. Okay, therefore it becomes the book value therefore becomes very important. So you end up using P by B for financial. So you will see that different ways of how a profitable business can be valued, and one way or one approach, one principle by which non-profitable businesses can be valued. Non-profitable, but idea has merit in it. Okay, we'll follow the multiple based approach. Non-profitable and no merit in the idea also will go by asset purchase. That is which is basically going in liquidation. Good. Yes. Have I answered the question? Any other doubt?
Yes, sir. Thank you so much.
Correct. So we will look at some of these examples in the case. Okay. So with that said, let me share this file with you, and then we will get started with some basic elementary exercises in Excel. Okay, so that we can uh, get started with the contents at hand. Okay, so first part is more or less done. Let's go to the part two. Okay, now before we proceed, how do I share this file with all of you? I am already in the FEA 114 ID.
Sir,
Yeah,
we have a batch email for the 50 students of our class. If you could just type,
okay. So
yes, sir.
what I should write?
Just give us 1 minute. I'll tell you what the exact email ID is.
Exact email ID. Yeah, you can tell me. I can write, or you can write it in chat. FEA लिखो क्या? ये क्या? FEA 14 नहीं, ये तो मेरा है.
MSc
Okay, correct. Oh, अच्छा.
MSCFT 203. Yes, it's put into the
अच्छा,
chat
MS.
box.
Okay, okay, ठीक ठीक है, एक मिनट पे आ जाएगा. MS
Yes, sir.
लिखने पे
It
आ
should
जाएगा
come.
शायद ना? MSc.
Yes.
ये वाला 2020. Yes, 20. MSc FE 2020. Okay. I will put day 1 class 5. Okay, I've shared the file. Everybody just download this file and let's do some very basic exercises in Excel. Come to page 3, which is Excel basic.
So just a moment, we yet to receive the file.
Sorry?
Just a moment, sir. We yet to receive
Yeah,
the
yeah.
file.
Yeah. Let me see. Yeah. One file number is 1. So 1 CW intro is the file. So we will try to do some similar um, numbers for the different files. Let's see if I can change the timing here. Yeah, let me know once you have the file.
Yes, sir. Received.
Okay, received. Done. So I'll just quickly recap of some very basics of Excel, and then we will get started with couple of exercises. Goal now would be to make a model, but before making the model, we would just want to revise our Excel and financial function theory. Okay. So basic idea of Excel is that it's a spreadsheet tool. When you write numbers, they will get right aligned, characters will get left aligned. Don't write commas while adding numbers. If you put wrong commas, then the number will become like a character. Okay, Excel will not be able to understand this. If you want to write commas, just write a number as it is. Then in home, there is a function for adding commas. then it will come with 2 decimal points. You can reduce them by selecting the decreased decimal option given here. Okay. So comma style and decreased decimal will make the number appear the way it is. Then primarily it's a decision maker, sorry, it's an analysis tool, Excel. So you will have to put Excel in calculation mode to do any calculations, and you can do that by putting a is equal to sign at the start. And if you, so by default, it will always show the output in the cell. But if you want to copy the formula within the cell and want the formula to be displayed, all you have to do is put a single apostrophe at the start so that the formula becomes commented. Okay. Single apostrophe is a way of commenting in Excel. Then Excel primarily follows the BODMAS rule because it's an analysis tool. So we will do everything as per the BODMAS rule. So the bracket that you will use primarily is the curved bracket. Curly bracket will be used only for array functions in Excel, and box bracket is used for the DAX language, which is used in Excel. So this is for all the formula building. Okay. The O stands for order, and the function key to use the power or raise to, okay, is this shift and 6 number key. So if I want to do 2 raised to 2, that's how you will end up doing it. Baki division, multiplication, addition, subtraction are all cell different functions or different keys in Excel you can use. Let's revise this by doing one example in the Excel basic page. Everybody in the file, come to Excel basic. Compound interest is calculated as amount is principal into 1 plus rate raised to number of years. This formula has multiplication bracket raised to most of the things. So you find out the following example value. Don't write the question, just find the answer to it. Okay, so we are looking at a fixed deposit of rupees say 1 lakh for 5 years at 10%. What is the amount? Can you find and tell me? If you want, you can post the answer in chat. I have kept the chat window open alongside for reference. ये मैंने chat window भी open रखा है. आप अपना आंसर निकालिए और chat window में post कर दीजिए. Formula is given. You want any break in between for the 2 hour session? We started a little late, so I forgot to ask that in between.
So we can finish this example, then maybe take a break or something.
Maybe, but the class is getting over by 11:30, right?
Yes, sir, correct.
So maybe we can just continue and close by say 10 minutes before.
Works, sir, works.
Fine. Okay. Next time, what we will do is at 10:30 we'll take a break. Hopefully we start at 9:30. I'm now aware of where the class happens and what is the setup. Yeah. Any answers, everybody? FD for of rupees 1 lakh for 5 years at 10% rate. How much will the amount be? Just a basic revision of the Excel functions formula. I'm presuming here that you already are aware of Excel, and we are just doing a brush up. Okay, we have one answer. Good. Others check. Correct. So I will also do it here on screen. As we said, no commas while adding numbers. You start with a is equal to sign, 1 lakh into 1 plus 10%. Percent is to be put as shift and 5 number key raised to 5. Here's the formula on screen for your reference. So this is typically how you will get the value. Now, your one of the ways of finding the answer is as we have done here. This is not how you will follow the formula building in the course or generally whenever you are using Excel. That is because here we have done hard coding. So the problem is by writing the numbers directly in a formula, it becomes very difficult to edit any input here. Secondly, documentation is not there. So tomorrow, 2-3 days hence, if I try to see the formula, I'll have to figure out okay, what exactly we have done here. Because the flow is not getting explained anywhere. Okay. So what you try to do is you try to use the approach of cell referencing. Okay. So first, what we will do is we will put down the labels for each of the inputs. For example, investment, and in the next page cell, sorry, we end up writing the input. The investment of 1 lakh years, 5 rate 10% amount is, and we'll follow the same formula, but instead of writing the numbers directly, what we will do is we take the cell reference. So investment is coming from this cell. So I'm just using the mouse and clicking on that cell, we get the cell address into 1 plus rate raised to number of years. Okay. So method is called as cell referencing. Okay, and we'll follow this cell referencing method for everything going forward so that we can do a link or chain based analysis. So tomorrow if I change the rate to say 5% for 8 years to 25,000, accordingly the answer will correspondingly change. Okay, everyone just solve the same example using referencing and just type in a done in the chat window once you are done. Done. Now come to page number 4. Sheet 4 पे आ जाओ आप. And here is an example on practicing cell reference. So sale price per unit is 125, cost price per unit is 63, and the number of units we are selling is 65. What you need to find is sales, cost, and profit using reference. Tell me the profit. Page 4 पे आ जाइए सब लोग, और प्रॉफिट कितना है ये बताइए. Correct. 40630 is correct. Good. Others take. Correct. I will also do it here. Sale price into quantity sold, then cost price into quantity sold, and then sale minus cost. If you want to see all the formulae together, press the button Control and approximation sign, which is just below the escape key. So when you do that, you will see all the formulae in the spreadsheet in one go. Okay. So if you want to come back to the numbers view, again press the same shift and approximation sign. You end up getting the same. Okay, these are all very basic and elementary things. So I am assuming you already know it. Therefore, I am going quick. If you need more explanation, let me know. Okay. Come to page 5. On page 5, you want to solve the same question, but this time instead of writing sales, cost, and profit as 3 different formulas, you just want to find profit. Sale price is 150, cost price is 95 per unit, and number of units sold is 100. How much will the profit be? Just first find it for 100 and post your answer. So instead of writing sales formula separately, cost formula separately, and profit separately, some combine all into one and directly find profit. Correct. So I will also put down the formula here. Sale price into quantity sold minus cost price into quantity. 500 just for it. Now we can drag the formula as it is. Couple of ways of copy pasting. Copy the cell, select everything, right click, paste. Other way, just catch hold of the right bottom corner, click left click and drag. Okay. So you can drag this only when the cursor turns into a black color plus sign. Okay. Now the answers that you're getting are not correct, and that is because you need to use absolute referencing. So you might be already aware of it, but just for the sake of it, let me quickly explain it. Okay. Now here is the explanation of when to use absolute referencing. For example, let's say I have a formula there is equal to A1, and Excel understands this formula by using a principle called as relative referencing. Now what is relative referencing? In the cell where you have written the formula to the cell where you have linked it. Okay. What Excel does is Excel will count. It's so for example in here it will be like 1, 2 rows above, 1 column below. So as per Excel, the formula is 2 rows above and 1 column behind. So when I copy this and paste it here, Excel is going to do the same thing, 2 rows above and 1 column behind. Answer will be 40. Here, answer will be 40. Now similarly, if I copy this formula and paste it here, what do you think will the answer be, everybody? If I am pasting the formula in F7 cell,
85.
85. Correct. 85. Again the same, 2 rows above, 1 column behind, 85. So this is the default setting in Excel. Okay, by default, Excel will always follow relative reference. But not always you want relative referencing. Okay? Sometimes you want referencing to be absolute. That is, if I copy this formula and paste it anywhere in the worksheet, for example, I copy it from here and paste it here, I still want the answer to be 10. In that case, all you have to do is add dollar signs to both the row and column of the Excel. So what we are looking at is called as freezing a cell or locking a cell or making the reference constant. Also another word for it is absolute reference. Okay. So when I'm putting a dollar sign before column A and before row number 13, the reference is fixed. Now if I copy paste the formula anywhere in the spreadsheet, it is going to connect back to the same cell. Okay. So default setting in Excel is without the dollar sign. Dollar sign is a facility available to us so that we can fix some of the references within. Okay, fix some of the references within Excel. Okay, oh sorry. Now, so with that logic, we come back to our previous formula, and now we have to tell Excel that some of the inputs have to remain fixed and some inputs will be variable. Right now there is no dollar sign, so all inputs are variable. So when I'm dragging it below, everything being variable, everything is getting dragged. Okay, so you don't want that. You want Excel to understand that the sale price and cost price should be fixed for every quantity sold. So I need to lock this cell or I need to pass on an absolute reference for sale price and cost price. That is cell number B1 and B2. So you can keep your cursor before B, between B and 1 or after 1. Keep it anywhere, doesn't matter. Just keep it close to the cell that you want to fix and press function key F4. F4 is a shortcut key to add the dollar sign. Some of your laptops you might need to press Fn and F4 together. See what works. Okay. For dollar or for absolute sign. Okay, everybody, make the change and see your answer. Here's the change in the formula. And tell me done in the chat. Have you followed? Dollar signs are going to be very, very relevant in our case because we will be forecasting, say, for the next 5, 10, 20 years in a model. So in that case, you're not going to build the analysis for each year separately. You're just going to write it for 1 year, and then you're going to put the correct dollar signs, and then you're going to drag for the remaining. To understand this part very clearly, ask me if you have any doubts. Let me know once you have changed the formula. Write a done or something in the chat window so that we can proceed. Yeah. Have you got it? Everybody made the change? Should we proceed?
Yes, sir. Yes, works.
Okay. Come to page number 7. And what you have to do is, again, we have an investment of 50,000 at a rate of 6%. Considering compound interest, can you tell me how much will be the amount if we are invested for 2 years or 3 years, 4 years, like that, up to 10 years? So tell me the answer for 9 years. So you first put a formula for 2 years, then you add the dollar sign, drag, and tell me the answer for 9 years. Good. We have an answer already. Others check. 9 years answer बत्ती है. Okay. Everybody gets the same. We proceed.
Yes, sir. We can proceed.
Done. So I will also show it on screen. 50,000 into 1 plus rate 6% raised to number of 2. In this, the investment amount 50,000, the rate 6% has to be fixed. Everything else remains variable. This is how the values will look like. Done. Now, so apart from this, you might have single dollars which can come in very handy sometimes. So let me explain single dollars. The formula you can write this way also, in which case the row number 1 has a dollar before it, so row 1 is fixed. So row is absolute, but the column is not. So Excel is going to count the column and not the row. So we are looking at 1, 2, 3 columns behind row number 1. So as per Excel, this formula is 3 column behind and row is equal to 1. So when you copy this formula and paste it here, Excel does the same thing, 1, 2, 3 columns behind and row number 1. Answer therefore is 120. 1. Okay. So that is how the single dollar just for the row works. You can also have the single dollar for the column. Okay. For example, in this case, we have a formula is equal to $A1. Dollar sign is before column A. So the counting is going to happen for the row and not for the column because column is absolute. So as per Excel, this formula is 1, 2 rows above and A column. So 2 rows above, column number is A. So when I copy this formula and paste it here, Excel will do the same thing. 2 rows above and column number is A. So 50. You will see 50 will be the answer. Okay. Now based on this logic, I'm going to ask some very basic oral questions on screen. And you answer what you feel is correct. No need to do any calculations. इसमें आपको कुछ कैलकुलेशन नहीं करना है, बस आपको जो बराबर आंसर लग रहा है वो आप मुझे बताइए. Okay. So here is the question, everybody. I have put down a formula is equal to A1 here, and I am copying it to the yellow cell. What do you think is the answer in the yellow cell? Yeah, 50. Correct. 50 is right. Good. So there is no dollar sign here. So Excel is going to do counting, one row above, one column behind. So we'll copy paste and yellow 50. Correct. I'm now going to copy this to the blue cell. What do you think is the answer now in the blue cell? I've changed the formula. Formula थोड़ा बदल दिया है. 10 is correct. Good. Dollar is there for both the row and column. So wherever you copy paste, it will link back to the same cell. I've changed the formula. Take your time. I'm going to copy this formula to the green cell. What do you think is the answer in the green cell? Single dollar now is being used. Looking for answer in the green cell. Okay, we have one answer. Others check. Okay. Any change you want to make in the answer, everyone? So $1. So what is fixed, row 1 or A? So row 1 is fixed. So the answer is going to lie in row number 1. The column A is not fixed. So when I copy this formula, Excel के हिसाब से formula is one column behind and row number is 1. So in the green also one column behind and row number is 1. Answer is 340. Okay, everybody check. Is it clear? As per the Excel logic, एक column पीछे और row number 1. Correct. So that's how the single dollar is working. Correct. Then let's change the formula and let's copy this to the orange cell. What do you think is the answer in the orange cell? आपके हिसाब से orange cell में आंसर क्या आ रहा है? $50 is correct. Good. So column is fixed, right? And row is not. So for row, we will do the counting. So Excel के हिसाब से एक row ऊपर और column A. You copy and you paste it here. यहाँ पे भी एक row ऊपर और column A. So answer is 50. 50. Copy paste and change. Okay, one last question on this, and then we'll do a final exercise, and then we will close. ठीक है, ये हो गया formula is equal to $E1. Now dollar signs don't matter as long as you don't copy paste the formula. जब तक आप formula copy paste नहीं करते तब तक dollar sign का कोई जास्ती importance नहीं. But once you copy paste, then the numbers change. Okay. So right now the answer is 230 in this cell. I'm going to copy this formula to the green cell. What do you think is the answer in the green cell? Okay, green cell is the one that we are aiming for. $4250 is correct. Good. So column is fixed, so the answer is going to lie in column E. Row is not fixed, so here we will do the counting 1, 2, 3 rows above and E column. Here also we'll do the same thing 1, 2, 3 rows above and E column. Answer is 4250. That is correct. Okay, done. So come to page 10, everybody. And this is the last exercise we'll do today, and then we will close. In the previous example, we did this, correct, where we said quantity is constant and sale price and cost price was constant and quantity sold was variable. ये example हमने अभी किया. अब उल्टा example try करते हैं. sale price and cost price are going to change and quantity sold is constant. Okay. So what you want to find is called as a sensitivity analysis. We want to sensitivize one output variable for two input. Output variable है हमारा profit और input parameters है sales price और cost price. So what you want to find is profit in each combination. For example, let's say here sale price है 75, cost price है 50. So per unit profit कितना है 25. Number of units sold is 100. So 2500 will be the answer here. Let's say in this sale 200 sale price, 100 cost price. So per unit profit is 100. You are selling 100 units, so 10,000 is the profit. So you want the profit for each combination of sale price and cost price, but you have to write one formula. आपको क्या करना है, एक फॉर्मूला लिखना है, फिर उसे कॉपी करके सब जगह पेस्ट करना है, और फिर ये पूरा कॉपी करके चैट बॉक्स में आप आंसर पेस्ट कर दो. ओके, एवरीबॉडी, oh sorry, I'll put the chat box again and make an attempt, everyone. Is the question clear, everybody? Is the example on you making use of the dollar sign, single dollar. Good. We have an answer already correct. Others check. Yes. Others check. Correct. Good. I'll also do it on screen. First answer you get without thinking about the dollar sign. So we will put sale price into quantity sold minus cost price into quantity. Same problem, 25. Okay. Now, quantity sold is not going to change, so we'll put a dollar sign to the sold quantity as it is. But the sales price is all coming from row number 4. Okay. So we want to tell Excel that, okay, if you want to pick up the sales price, only pick it up from row number 4. How do you do that? By putting a dollar sign in front of row number 4. Cost price is only coming from column number B. So again, put a dollar sign only in front of the B column. Now copy paste. So copy paste you can do diagonally, but if you are trying to drag it, then you will have to drag the row first and then the column, or column first and then the row. Okay. Diagonally you cannot drag the formula. Here's the application. So this is just an example or an application to single dollars. Okay, making use of the row referencing, the fixed row referencing or fixed column referencing. Okay, done. So next we still have to do two more things in Excel. One is the revision of a function in Excel called as data table, and other is the if condition. Okay. After that we can proceed to the financial functions. Okay. So we were basically going as per the schedule that I have written down here. So let's do the remaining Excel part and financial functions in the next session. So probably next session, first hour we will spend on that, and then the second hour we will try to build our first basic case. Okay. So if we push faster, then probably we will be able to do both. So I will be able to demonstrate you the application of modeling for both the cases, project financing as well as equity value. Done. Any other doubts, questions, everybody you have, let me know, or else I will just send the file to and then we will close. Yeah. Any other queries, everybody?
No, sir.
Okay, perfect. Then let's stop here. I am just sharing the file in here, the revised one. So have I saved it? 21. Okay. This system has a different time setting. Okay, done. Here's the file, the one I have worked on. So next class we will continue with the couple of exercises that are left, and we will also do some exercises on financial functions. So we are trying to look at Excel and financial functions to the extent that we will be able to build one. Okay, so with that said, we will stop here. Okay, thank you all for joining in. Okay, good day to everyone, and let's catch up next
Thank
week.
you, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you all.
Thank you, sir.
Thank you, sir.
Thank you.